Our landlord?
Oh, there's a check-in though.
Seemed like he was going to be that kind of guy.
Now, probably got better things to do.
That guy? No.
No? Be curious to know if that this is his place and that's it, or does he have a handful of things?
Feels like he's got a handful, right?
That would be a handful. Yeah. I think he's a mover and a shaker. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Louie? Got to be careful with Louie these days. Louie's a little fragile here. That's all right. Welcome to the Closing Beat Stock Market Update Show. We try to do things a little bit different where we teach a little bit along the way in addition to going over how things are playing out. We are financial advisors, and from what I can tell, we're like the only financial advisors that actually pay attention to the markets and make changes and manage our own funds and don't charge you for that. So maybe it's a bad thing. I don't know. Maybe we should change our model and just start charging people for a lot of stuff and like make money off mutual funds and all that. I don't know. It's a thought, right? It's not happening. One of the other things we do is every Thursday night, we do Wine and Wealth. It's about to get an upgrade, but we do Wine and Wealth where it's a real hangout. Just a hangout kind of a class. Pretend you guys are sitting here with me. We go over all kinds of different topics. Last week we did a State of the Market address. This week we're going to do probably what's changed, right? So last week was in honor of tonight's State of the Union address. We did a State of the Market address, and next week or this Thursday we'll talk about what changed. What's changing out there and what actions would we take? So we'll do that in addition to maybe a couple cool things that I always like to throw in there. So I hope you'll join us for that. Our research site, you can join if you're not a client, jazzwealth.com/research. Cody did a post actually on the State of the Union, the performance of the markets, how things go, a little bit of data there, and took you back in history a little bit, maybe a little fun as well. So somebody asked that question yesterday. I believe it was Harry, asked the question on that one, and we put that data up and refreshed it. I had done that a couple years ago. I did it for Trump's second State of the Union, and then it just, the world went crazy from there, so I didn't really cover it. But that is up published? Yeah. It's up and live, ready to go. And of course, we do our office trades every day. I'll give you an update on how that's going here in just a second. But first, let's take a look at the stock market. What's going on out there? Everything is the same as yesterday for the moment, right? We talked about this. You have the presumption of the market performing like spaghetti on a plate. Put spaghetti on a plate, go walking around with it, and try to guess which way all those little guys are going to go. It's impossible to guess here, right? So the S&P back down to about 10% losses year to date there. Spaghetti on a plate continues. That's probably the easiest way to say it. And it's not time to make a big decision in the market, right? There's no good reason. I covered all of them last week. There's no good reason why now is the time to be a hero and decide you're going to pick the next greatest index, the next greatest stock, next greatest mutual fund or whatever. And a great example of that is look to our office trades that we do. We're just doing a lot of little trades right now. Just a lot of little things going on, moving things around. Nothing is like gotta be in 100% and see what happens there. Now, as far as the stock market today, the energy sector, we use the XLE. The XLE, the only sector higher year to date and the only sector higher today, actually. Oil, unfortunately, heading up, closed at $106 a barrel there. That is crazy. So yesterday we talked about it feels like it's trying to break 100, just looking for its moment in time. Today was the moment in time. I could feel that one coming. And whoa, that's a pricey barrel of oil there. It also marks the second time under this current administration where we've released strategic reserves, 30 million barrels, I think, something like that. And the price of oil went higher despite that. So know that that's actually normal. The last time this happened, we went back in history and showed how it actually doesn't help gas prices in the short term and actually is quite bullish for oil. And so, anything you see today is going to be higher if it's related to energy or oil. If we look at real estate, I'll tell you what happened here. Real estate wasn't positive for the day, but it was the second best performer. Yields plummet again, right? Let's take a look at bonds. So we had this massive sell-off in bonds over the last couple months. We're anticipating rates going higher, all this great stuff. The bond market prices in 5, almost 6 rate hikes, actually. And then all of a sudden, this war thing starts with Ukraine and Russia and all that great stuff, fully recovers all of that. Now remember, this is the price of bonds. So as price goes up, yields go down. We're basically where we started at the beginning of the year. So home sales, if you're out there buying a home and you're trying to lock in a rate, much better right now than where you were just a week and a half ago. So a huge difference there. You're talking about a point probably. So anyways, that's the stock market. One last thing I want to cover here, Russia. It's closed. The stock market's closed, but ETFs are responding and, of course, adjusting accordingly. Another 23% for Russia today. That's now an 80% decline there, and their market has been closed yesterday and today. I don't know if it's going to be open tomorrow, but they forced the markets to be closed yesterday and today. I dodged a bullet on that one. Would just say it that way. All right. So that's the stock market, right? And there you go. You can put it back to the S&P there. Now, here's an interesting way of looking at this. A lot of people like to look for deeply discounted stocks, right? Maybe that's you. One way that you can do that, is kind of your lesson here, is look at the spread. I'll give you we'll give you skills, right? So you look at the spread between the 52-week high, which is not even on the chart, and the 52-week low. What's the gap between them there? So for example, on skills, if we were to run a scan saying, show me the stocks that are the greatest distance, has the greatest distance between its 52-week highs and lows, meaning the 52-week high was not $100 and the 52-week low is 90, meaning 52-week high was 100 and the 52-week low is like 6, right? Big wide spread. Skills actually has about a 95% spread between highs and lows. In other words, it was a 95% pullback from those highs. And so that's one thing you can look at if you're looking for these beaten down stocks. I am not saying that this is the best time to look for beaten down stocks. I'm just saying it's one way to scan for them. So I throw out a few of them here because I didn't get a chance to make the actual sheet there. Virgin Galactic, SPCE, comes in second place. Got about an 88% spread between highs and lows there. Stitch Fix, definitely beaten down, very beaten down. About an 86% spread. Lemonade, which I'm actually pretty optimistic on their business, whether they can make some money with it's a different story, but I like the business. Big spread there, it's down about 79%. DraftKings is another one. The spread 76, 77%. Roku's sitting at 79. Sorry, that one's sitting at 79. Lemonade was sitting at 86 there. And trying to come off lows. Zillow, right? A lot of these names, you've probably already looked at them. These are the really beaten down stocks without having to sort by performance and figure out all this stuff. Zillow, 75%. Pinterest, there you go. So Pinterest, 75%. Zoom is sitting around the 70% area. Penn National continues to get beaten up, but I'll give it there. I mean, that's pretty cool. It's actually managed to stop itself from moving lower, about 73%. Rivian's going to be a little bit more here. Now, this is not as much history, right? 73% from the 52-week high, which is not 52 weeks ago, to the lows here today. Very weak there. And lastly, we'll do Block. I point this one out because it is coming off of lows, but Block is still about 65% from its 52-week highs. And that one's probably showing the most promising signs. Maybe PayPal as well. Not quite as good as Block, but that might be one to throw in there. DocuSign's another one. And so it's just a fun way to kind of explain, how do you find beaten down stocks? You don't actually need to go click. Let me look. Think about what a computer might want to look for, the spread between the 52-week high and the 52-week low. So hopefully that helps you. All right, we got our office trades update here. What did we do today? We did quite a few things, actually. And then I'll just move on from that. So here we go. So first thing up there, we did Raytheon. So we talked about Raytheon and the idea of this one being extended. Interestingly, it was one of the only defense stocks that actually pulled back. So helpful there. We looked at a short on CVX, 165 calls. We looked at a long on United Airlines there, the $38 puts going out to April. The ACAM did not get filled again. So I was trying to buy back the $95 puts for $1.10, did not get filled. So you know what I did? I went to the 115 calls and I sold those. Now I essentially have a strangle on ACAM. We got Royal Caribbean, played that one with the $60 puts, sold those, and then we rolled Las Vegas Sands. All the details, and of course my entire screen is visible in the research site. Oh, State Street, I got suckered into that one. I had to do it. $75 puts on State Street for $295, right? Huge. That's a big one. We looked at our return on risk, return on margin, I should say, and took care of that one. So those are all the new trades today. Fairly active compared to yesterday there. So we'll see. All right, one thing I want to talk about here is your defense stocks, right? So we were talking about looking at defense stocks pulling back. So weird to say that, right? We're in the middle of all this, these bombs dropping, all this is going on. Take a look. Here's the returns of defense stocks as a whole when they outperform the market and themselves by more than 10%. So what we did is we said, all right, the defense stocks as a portfolio, let's take a look. If they outperform the market by 10% in any 2-month period, I want to know the forward returns following that. So for example, I'm missing the thing down here, but this is the next day, this is the week, this is the month, right? What is that, Cody? Is that 6 months? Let's see where we go there, because we're missing the dates on the bottom. Let's just take a quick look here. So for the defense stocks there, I'm going to go to the first one. This is month. We didn't do day, so we just can't see it there. So defense stocks, after outperforming by 10% or more over the next month, down 3.08%, right? Over the next 3 months, down 3.23%. Over the next 6 months, down 6.7%. Over the next year, down 12%. After outperforming the market and themselves by more than 10%. We're outperforming by over 15% at the moment. That's where we stand. Any other time, this is the average performance during 1 month for defensive stocks. Any 1 month, take the average of every single month, 0.8%. The average performance of defensive stocks over 3 months is 2.3. Over 6 months, 4.8. Over a year, 10.1. So that's what normally happens just in a normal moving market. So what we have is now defense stocks actually showing you that they tend to underperform after shooting so far away from everything else. And so that's why we looked at Raytheon today and a couple others to put in our office trades. But we don't even need them to fall. We just need the pace of the rally to stop. So I wanted to share that data with you. If you're thinking about now's the time to buy defensive stocks, I can't tell you what to do, but at least now you know, well, technically, if you look back through history, we tend to underperform. So there you go. What you think, huh? Share a little something extra with you. I got a fun one real quick. Everybody looking to buy a car. You're looking to buy a car, you find out they're so expensive. Here's good news. On the screen, we're actually showing auto inventories. These are wholesale inventories. And I'll just change it here. There we go. So this goes back to 2021. Inventories are rising rather sharply right now. Obviously, that's a good sign if you're looking to buy a car. It's also a good sign if you're looking to get maybe a lower price as that starts to bleed into the market. In other words, now it wouldn't be the time to rush out and go buy yourself a car as prices are still high. Inventories are rising, but those sales are strong. Now, if you look at auto sales, I'll try to overlay, and I'm going to do it like this. Where do I got this wrong? I'm going to go over here. Look at auto sales in general. There you go. Try to put it on the screen there. Auto sales in blue are bleeding off, getting weaker and weaker. Inventories going up, auto sales bleeding off. So it's starting to shape up where that price side of things is going to work back in the consumer favor. One place that does not work in your favor is if you're buying a truck. All the actions over there. Light trucks in orange here. Light trucks continue to just be moving back towards pre-COVID highs there. So that's the one area where you're probably not going to get the best deal there. But anyways, buying cars, looking at things like that, know that inventories are rising. Prices are going to start getting a little soft for you there, according to the data. Yeah, what you think? Who's a car buyer out there? Anybody? All right, let's go over to new highs, new lows, and then we'll do some more, and then I'll take your questions. Apache, anything related to energy today is going to be strong, whether it pulled back or not. We talked about Chevron just a minute ago, very strong, getting very extended here. Hess is another one. It's not extended. I talked about this yesterday. Breaks out. Today it makes a new 52-week high and maybe has some room to go there. It's not extended like the rest of them, so something to look at there. You have RTX, that's Raytheon, new 52-week highs, and one of the only defensive stocks that managed to at least close flat. If you're looking at like a Northrop Grumman, it finished up the day 3%, right? So if you look at Lockheed Martin, finishes up on the day 5.2%. Very extended here, just a little pricey, so we chose not to mess with that one. Also, you got Cummins. That would be one of the 52-week lows. I point this one out because you see what's happening there? Starting to get a little extended, maybe get more of a flush out to the downside. Definitely weaker in the short term. And let's take a look at stocks in the news. Zoom. We just mentioned this one of the bigger spreads between 52-week highs and lows. Beats on expectations. They had earnings. They beat by 20%. They guided on earnings weak. So that was where all the problem was. They missed by about 15% there. They said the problem is we actually see a slowdown in smaller business clients. So smaller business would be people that, 4 or 5 people using Zoom, less and less people are using that one there. And they're seeing smaller revenue there, people spending less money. They also are doing a $1 billion buyback. If you're curious, that's about 4% of their total value there. And the stock was lower on the day. Guidance and missing on small business. Can't make it if all they have are the big 100,000 a month clients. Workday was in the news as well, up 5% today. They beat on earnings and revenue. They guided for their subscriber revenue to be higher. That was good news for them. That was what everybody was focused on there. And that also helped raise their total operating margin for the year. So Workday coming out of a downtrend. You can see it right there. Breaks the downtrend today, holds above that downtrend. So both the fundamental investors are going, not bad. Got your operating margins higher. You're going to beat on subscriber revenue. You're actually going to raise that. That's awesome. Like to see that. Technical traders go over there and go, cool, we broke the downtrend. I believe in all this, charty stuff, and so they like that too. I like it. Amazon in the news there. The FTC is going to be looking at maybe getting in the way of their bid for MGM Studios. Stock was just down a little bit, but it was a weak day as well, so I don't think it was much of a mover for it. One mover here was Smuckers. It beat on earnings. They lowered their guidance, and the focus was on costs. Costs, right? Not a problem for Target, I'll talk about in a second, but for Smuckers, they said this is getting out of control, so that obviously hurt them today. They took the bullet here today. Chevron, I already talked about this. Stock was higher today. They actually are buying back shares. They raised the range. They were at $1 to $5 billion. They raised it $5 to $10 billion for share buybacks per year, by the way, not just total, like per year. So they're really going to commit to that. And you're seeing that. A lot of people in the oil space are now saying, we can absorb these high prices. We can enjoy this. We don't need to expand production now that prices are so high. Think about that. If you're able to get this many more dollars for making a product, just go easy on yourself. Buy back shares of your company, enjoy the high prices, and why expand? What's the point? We've reached that point with oil companies and oil stocks now. A little bit scary, but that's where we're at. And then Target, one of the bigger movers here today, 10% higher. It is now 19 quarters in a row that they've beat on store sales growth. Very impressive for Target. A couple key points from the transcripts I was reading through. The CEO says, we achieved growth while protecting the customer from inflation costs for now. Inflation was mentioned over a dozen times in Target's quarterly transcripts here. So that's another one. Every company's mentioned that. Not like that's a surprise, right? Also, you have, they said adding Ulta. They added the Ulta sections to their stores. That helped them see higher sales per square foot and more customer engagement. They were really excited about that. People sticking around in the store looking for Ulta. I didn't know that, right? I thought you just go to Ulta to buy Ulta. Here's a fun fact, by the way. As you're reading through, sometimes you read through these earnings transcripts, you learn something, right? Yeah, what are you doing? You watching TikTok all night? You read stuff like the transcripts, you learn that Target is actually starting to put nurses in Target stores to provide ear piercings for kids. And you go, all right, I don't know, like, where is that done? I can't picture in Target where you get your ear pierced, but they're working it out. And their idea was it's going to make for a more memorable experience for a younger, it's not a joke, memorable experience for a younger guest, which maybe translates into more future traffic. Get them to remember Target's the place you go for this, my makeup, I do my ear piercings, I buy my clothes, I get my groceries while I'm there. That's for real. They're actually putting nurses in stores there. And online sales was one of the better metrics for them. I don't think I saved it, but it was like 21% of their revenue came from online. That'd be up 10%. I at least remember the stat there. So that's what you have for today. Tomorrow you got Abercrombie & Fitch. It's going to be all retail stocks. Abercrombie & Fitch, Dollar Tree, I believe the Children's Place, which I don't have on my list, American Eagle, there we go. And that's pretty much it. Yeah, as far as retail goes. Tomorrow, well, we have the State of the Union, but tomorrow we have Jerome Powell testifying before Congress there. That'll probably be one of those things that they just broadcast. the whole thing. So if you're watching like financial media, you see nothing else but the entire testimony there. Crude oil inventories as well. We know they're awfully high, but we'll see what the drawdown becomes. And Ford will be talking about their car sales for February. So be on the lookout for that. I'll take your questions if you happen to have any. Otherwise, I got things I could do. I'll let the stream catch up for a second. Oh, man. And that's right, Kirk, from the other day, raising, in some markets, not all their markets yet, raising their minimum, what they would call their minimum wage to $25. Yeah, mentioned that yesterday. That's a lot of dough, but good for them. Yep. Jewelry department's the same as Macy's. See, I guess we don't have like the different Targets around here. I don't know. I don't go to Target much, I guess, but yeah. Yeah. I saw an article in Wisconsin. They were trying to pass 401k for kids. Again? Yeah, that's, okay, so a while back they tried to do that, but they were going to make it a forced thing to do, and that's where it became a problem. They lumped it in with ones where they were going to, either you participated in your employer-sponsored 401k or you participated in the government-sponsored 401k, and everybody got all upset there because they're like, hey man, we already participate in Social Security and supposedly there's no money there. That's a big problem. Stay out of my dough. And so that died, but they're bringing it back, huh? Yeah. Matthew, they said nurses. I thought the same thing. I'm like, you don't need to be a medical professional to be giving ear piercings. I don't think, right? I highly doubt that when you go to the mall, in a little kiosk there, and you get your little kids' ears pierced, I highly doubt those are nurses. I'm assuming that's a different type of training. But it could also be a foray into something else as well, you know, maybe in the medical side. I don't know. Yep, there you go. Is OPEC meeting this week? I don't believe so. Crude oil inventories come out tomorrow. Beige book and all that good stuff. Yeah. Isaac says, man, at these levels, 3 to 5 year timeline, would you rather own Starbucks or Alphabet? I can't tell you what to do. I would say that I'm always attracted to more of a discount, even despite what Starbucks has going on. Maybe, you know, getting their the union bug spreading there. I just like the idea of a discount. So if I'm comparing one to the other, which one looks more discounted? Yep. I think currencies around the world are a tough place to invest right now. You're asking for a ton of volatility there, right? You see if you look at the currency exchange rates for $1 against the Russian ruble, it's just a dash. There's nothing there. You can't. I think there's a lot of potential volatility there. South African gold industry leading. Can we imply that gold has more legs to run this year with inflation? Well, you would think so, right? Because gold just finally woke up. Inflation has been known for a while, but it just finally woke up. And it seems like it's not stopping anytime soon. Gold miners, anything like that, probably something to keep your eye on. Not here. You watch for any kind of pullback, because it is a lot of those names are a little extended. Use the potato and the ice. I know what the ice is used for. What's the potato for? You put the potato on one side of the ear, and then ice on the other. I remember people would put ice like on both sides like that. When we were kids, you would pierce your ear just, you know, willy-nilly. And you put ice on both sides, and you wait till you couldn't take it anymore, and then just poof, right through it. It's been a while, yeah. I didn't do it I never wanted to have my ears pierced, but I did it with the tongue. Just straight through.
No,
you don't remember that? You were a little kid, I guess.
No.
Yeah. I was that weirdo that was like, you just right through. That's going to be great. That was horrible. Bad for your teeth, too. I can vouch for that. All right, not gonna say it. I think we've done it there for the day, and yeah, it's good. So we will be back tomorrow to do this all over again. Appreciate you guys watching and joining us here. Expect more volatility. No need to be a hero here. Anybody that tells you to be a hero is just gambling, right? You could be a stock picker. You can have fun at some of these things, but there's no need to have a large position in anything right now, right? Let it settle down. Let's see what happens. You enjoy the rest of your day.